In today's episode, we're going to be talking about timing of deductions for small businesses and for individuals. And it's a crucial part of making sure that your dollar goes the furthest and comes back the quickest. We're going to be discussing various different things, from expenses in relation to capital items or expenses that are upfront in nature. We're going to be talking about GST and the timing of the cost to ensure that you get your GST back in the quickest and shortest manner. This is What School Should Have Taught You, a podcast where I share with you all the lessons you need to know about building true wealth.
Everything school should have taught you in one place. With a property portfolio of over 17 million and an accountancy firm of over 16,000 clients, as well as being an accountant to some of the wealthiest people in Australia, Jeremy Iannuzzelli will be sharing his lessons on everything school should have taught you so you can build the life you want.
Timing of deductions is crucial to anybody's individual circumstances or small business circumstances. I'm going to talk to you about individuals today, and then we'll move forward with small businesses a little bit later on in today's episode. Let's start with individuals. Now, most people will have expenses throughout the year which will relate to pens, pencils, printers, computers. If you're a property investor, it could be council rates, water rates, insurances and repairs and maintenance. I'm going to use individuals as a bit of an example around property, and then we'll move through work-related expenses. If you're a property investor, a lot of people try to hold off spending the money. And I agree, $1 in your pocket is better than somebody else's. But if that cost that we need to spend is a crucial part of maintaining the property or a crucial part of running a successful property investment portfolio, then we've got to try to get the timing right. Now, if you've got some substantial repairs and maintenance that need to be done, from fixing the handrails to fixing the doorknobs, even maybe replacing a couple of air conditioning vents, if you know that you need to do that, say in the months of May and June, it might be worthwhile you spending that money than holding off until another 6 more months. Now, the reason why I say that it might be worthwhile spending that money in May and June is that when you complete your tax return after 30 June of that financial year, it will give you an opportunity to maybe obtain some of that money that you've paid back in the form of a tax refund. So again, for argument's sake, if you spend the money of say $3,000 to $4,000 worth of legitimate repairs and maintenance that aren't capital, that need to be depreciated, then that is a way that you're putting your property into a negative geared position, which will ultimately provide you potentially a bit of tax benefit back. That tax benefit is going to come to you much quicker as opposed to spending the money in July, August or September, where you've got to wait till the following financial year to obtain that tax benefit. So it's a very crucial part. Now, alternatively, if you've got expenses that you know you can hold off and they may have come up for repairs. For example, some of my properties, there's a couple of tiles that are on the way out that need to be re-glued or fixed, but not a crucial part of maintaining the property just yet. These are expenses I'm holding off now, and we'll start to do a lot of those costs around the May and June period. Again, it's to keep more of my money in my offset accounts, helping me reduce the interest I pay. And then when I do actually spend the money in May and June, I'm ultimately getting the tax benefit back a lot quicker. So that's very important. Now, if you're an individual that just has work-related expenses, for argument's sake, and we'll utilize a trade in this particular example, if you know there's a lot of repairs that you need to make to your equipment, rather than wait until July, August or September and you know they need to be done in May or June, it might be worthwhile getting that nail gun being repaired in May, or maybe getting that new handle for your hammer, or maybe an opportunity to buy more discs for your angle grinder. Maybe look to do them in May or June as opposed to July, September or August. Hence the reason why we see a lot of companies, especially retail entities, give lots of discounts before 30 June. A, they want you to spend their money, which is good, but B, it's an incentive for you to spend the money on the things that you know you may not need just yet, but will need in the next couple of months, and there's a tax incentive around doing it. Now I want to focus on the other side of timing deductions, and this is aimed at small business owners. Now, again, many small business owners before 30 June will try to go out and buy maybe some equipment that they need where they can instantly write it off. It could be some stock that they need to purchase where they know it will be sold in the July or August period, or it could be bonuses to your employees that you need to provide. Ideally, you want to be doing that before the financial year ends because, again, the money that you're spending before the financial year ends, you're able to obtain the tax benefit on that earlier as opposed to waiting till July, August or September. So timing of deductions becomes quite crucial for your cash flow. Now, if you're a small business registered for goods and services tax, or in short, GST, timing of expenses becomes very crucial, especially when trying to obtain some GST benefit back from the government. So it's important to understand the timing of when you're spending your money. If you know you've got a lot of costs coming up, say for argument's sake, in October, and let's use this month of October of 2024 for argument's sake, ideally you want to be spending all of your expenses in September if you can put them off. Why? Because if there's GST included in the expenses that you're paying, it's going to help reduce the amount of GST that you need to pay the ATO in the 30th of September 2024 business activity statement. So timing of expenses is not only crucial to saving tax, but it could be crucial in saving GST. So cash flow is key, as we all know, whether you're an individual small tax return, a small or medium business. If you can time the way that you create the expenses or pay for the expenses, it could be crucial in you obtaining significant levels of cash flow benefit at a sooner time. So it goes back to the old rule, money in your pocket is better than somebody else's, within reason, of course. If you're enjoying this content, don't forget to hit subscribe on YouTube. And if you're listening to us on iTunes and Spotify, hit that follow button. I'm Jeremy Iannuzzelli, and this is what school should have taught you.